Hello my friends, Katie Day with the Moving to Texas team at Coldwell Banker. Today I am joined by Ryan Rosplock with Guaranteed Rate Affinity. Wanted to do a quick video with Ryan as he's one of our preferred lenders for our clients. And one of the things that we've been seeing come up more and more frequently in current state of economy is refinances.
Yes. So actually there's the main reasons I want to save money per month, right? The other one is if you're not really focused on the money part, like the cash flow, it's I just want to save money, then we can look at going to a 15-year.
Okay.
In accelerating the amortization and saving a lot more interest. And then the other one, of course, is taking cash out. If they've got $30,000 in credit cards at 10% or 15%, it makes sense to tap into my equity to pay those off.
Or investments or other things that you need
Investments,
cash
sure,
for, right?
sure.
Okay.
Yeah.
Cool. So not only can you save money possibly with a refinance, but also take money out to do other things with it.
That is correct.
Right. Okay.
That's correct.
Just kind of from a high level, I guess, like what you go over with clients when they're thinking about maybe refinancing their current home loan.
Of course, yeah. So really, a refinance is just it's a financial decision. We want to look at numbers. How much money can I save? How much money will it cost? Does it make sense? Depending on how long you're going to be in the house. So there's a lot of variables that go into it.
Okay, so it makes sense to speak to someone to kind of go over all of those different things. It's not just like, hey, interest rates are lower than when I purchased, so I'm doing it. Right?
Correct.
Okay.
And the other thing is a lot of people will calculate those numbers over 30 years.
Okay.
So how much will I save if I do the refinance over 30 years, which really doesn't make sense because most people don't stay in the house for 30 years.
5 to 7, maybe 10 years.
That's pretty typical. So we want to figure out the break even, figure out how long they think they may stay in the property, and then they can really better decide if that makes sense for them.
Okay. Okay, fantastic. So if I was giving you a call and you were able to run numbers for me, tell me whatever the new interest rate would be,
Right.
the loan terms and all that. Say my closing costs were like $4,000.
Sure.
How would you then kind of talk me through the next steps of what if I should or shouldn't do a refinance?
Sure, we would calculate the closing costs as you mentioned, but then also see how much they're paying now in principal and interest and see what that would be with the new rates, and then calculate that break-even period.
Okay.
And then if let's say it's 2 years to get their money back and they feel they're going to be in the house for 5 years or 10 years, then we can figure out how much they may save based on those goals.
Yeah. So you need to be in the house longer than the...
That is correct. There's no point in going through all the paperwork if you're going to just break even.
Yeah, exactly. Okay. And then as far as if I were going to refinance, like you would still kind of do it like you did when you purchased a home. You'd have an application and all of those things. What does that process look like?
Very similar to buying. We need the same information, pay stubs, bank statements, tax returns, depending on the profile of the customer. So the same process, just there's no contract to deal with. It's simply just getting an appraisal.
Okay. Awesome. Well, that is really good information. I appreciate you taking the time to shed some light on the process. Anything else you want to add?
That's about it. I appreciate it, Katie.
Okay, sounds good. If you have any mortgage-related questions, give Ryan a call with Guaranteed Rate Affinity.